Well, shit. The crypto markets are pretty much the worst that they have been since the depths of the 2018 bear market. It's pretty bad out there, like really, really bad. And the bad news is it may not be getting much better anytime soon. In today's video, I want to break down what is happening right now in the cryptocurrency markets and why things may get worse before they get better. Particularly, we are going to be talking about a potential liquidation cascade as billions of dollars of assets are at risk of being liquidated, as well as the ongoing equity chaos. My name's Lark. I make videos about investing. If you do like that topic, then definitely subscribe to the channel and of course hit that thumbs up button for the YouTube algorithm. The more thumbs up that we get, the sooner the bear market is going to end. It's just science. It's just science. I don't make the rules. By the way, if you're not yet signed up to our newsletter, then now is a great time to get involved. There are still opportunities in this market, and you can get started for the wildly reasonable price of free by using the link down below in the description. Okay, now let's get into this topic. Even as a veteran in the cryptocurrency markets, I'm still just blown away by what we are seeing right now. When crypto breaks, when stuff starts falling apart, man, it gets pretty dramatic. Let's take a look at some of the charts to get started off with here. Bitcoin, at the time of recording this video, has basically blown right through the 200-week moving average, getting as low as $21,000 at the time of recording this video. Now, to be clear, the last three bear market bottoms were marked by a test, and often a wick under the 200-week moving average. In 2015, we wicked 15% under the 200-week moving average. In 2018, we actually just bounced off of it twice. And in 2020, we wicked 30% under the 200-week moving average during a massive cascade of liquidations on BitMEX. We are now trading under the 200-week moving average for the first time in 2 years. It's a historic moment in the cryptocurrency markets. Does that mean that the bottom is in? Well, we may be getting close, fingers crossed anyway, but there are a few things to watch out for which could see some serious price capitulation come into play. Now, when we talk about capitulation, it is both looking at serious bear sentiment as well as volume. Now, in terms of the bear sentiment, look at social media, it seems to confirm that people are definitely afraid, understandably. The Bitcoin Fear and Greed Index put in a reading of 8 earlier today. That is a near record low reading for the index. We have also had a massive volume spike during this sell-off, which does typically coincide with a capitulation event. In fact, this was the third biggest volume day in over 2 years. Normally, we would say that this could be getting close to capitulation, but we are still facing some potentially huge hurdles, in particular some big liquidations which are on the line, which could cause massive downward price cascades as liquidation engines start to kick in. Two big ones to highlight are the $500 million Celsius loan currently sitting in MakerDAO. Now, they have added about $175 million extra worth of Bitcoin to lower the liquidation price over the last 24 hours. Currently, if the price drops to around $16,800 or so, then $500 million of Celsius's Bitcoin will be liquidated. That is, of course, unless they add some more collateral. The question is, how much more collateral will they actually be able to keep adding in to stop from getting liquidated and losing all their customers' money? Now, the big funds know the liquidation price. They're going to be hunting for it. We're seeing some serious dirty whale games going on right now. And the other on-chain nightmare, the approximately $900 million facing liquidations for the current prices of Ethereum. Now, these players, those $900 million of Ethereum, they can add more collateral, of course, but some may not have the collateral to add. And once the liquidations start and the price hits a free fall, then guess what? It puts more pressure on the other borrowers who just topped up their collateral, meaning they have to add even more collateral to avoid getting liquidated, collateral which they may not have. basically that cycle on repeat until either the market stops dumping or all the leverage gets washed out. These liquidations are probably the biggest threats right now, short term, to the price. And if they are triggered, we could see some truly insane low price points coming into play, like scary numbers. So be ready for the worst. It could be a rocky ride. All that stuff, though, just the crypto specific stuff. Now, if we zoom out to the macro scene, then we can actually see a pretty grim picture forming up as well. The S&P 500 has now officially entered into a bear market. Yay! Only now, after all these months of pain. That's crazy, man. Because as you know, we are heavily tied to equities right now. And the S&P 500 is now only down 22%, but everything else is down like 90%. The S&P 500 is just entering a bear market, then that could mean a lot more crypto price pain. Not necessarily all downward action, but definitely a lot of sideways and painful, just false hope, etc., etc. And of course, we could see a recession being affirmed in the USA in 2 weeks, which at this point seems almost certain. There's nothing cool or fun about recessions, obviously, and we could be in for a long and rough ride for our bags while all of this stuff plays out. There are many signs that a brutal recession is imminent. Top analysts are out there calling for it, and then we have things like high yield credit default swaps, which are surging to levels last seen during the COVID crash. I'll do a more in-depth video on the recession for you guys here coming soon. Then, of course, we have the old Federal Reserve just plop, 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 plop. They got their meeting on Wednesday. It's going to be a big deal. And it's seeming increasingly like they are going to announce not a 0.5% increase, as everybody had been expecting before this big sell-off this week, but a 0.75% rate hike. Inflation going up in May will likely force the Federal Reserve to be even more aggressive with their rate hikes. Silver lining here is that the markets may actually like the Fed doing that. It'll show the Fed's very serious about tackling inflation. Fingers crossed that the market takes this positively. Let's wait and see how the market reacts later this week when the Federal Reserve announces what the rate hike is going to be. One thing is for sure, though, right now, that as a cryptocurrency investor, we are at the mercy of the broader markets, which sucks. And, kind of sucks in terms of like the narratives we have around crypto, right? Crypto's trading like one big risky basket of tech stocks right now. Future of money. Hugely risky, hugely volatile during this bear market, as we're all learning, of course. A lot of coins are not going to make it. The coins that do could see an 80 to 95% peak to trough price crash, just like happened in 2018. So look, if this is your first bear market, be patient. Don't rush. There's really, in fact, no need to rush. Just take your freaking time. Be calm. When the market bottoms, you're likely going to have a lot of time to buy in. Now, personally, I've been cost averaging into Bitcoin ever since we crossed under $42,500. I'm going to continue to do that throughout the entire bear market. For many investors, this may be your last chance to actually acquire a full Bitcoin. When things settle down, we can all see a bit more clearly that it's a time of opportunity. Now, this chart here from Rational Root shows that from time to time, we do put in a market bottom. And of course, there is, when that happens, usually a good amount of time to accumulate afterwards. So again, don't rush. This kind of price trauma, it's difficult to recover from. It'll take a while for the market to get back to normal, quote unquote. And just stop obsessing about perfectly buying the bottom. Almost nobody does that. The best strategy is to keep cost averaging into your favorite assets throughout this bear market. Bear markets can last longer than you think. Don't deploy all your capital early on. Take it easy, spread it out. The key thing is to survive, which is obviously easier said than done in this kind of psychologically difficult market event. I've lived through a few of these now, and let me tell you, they're never really fun. Without a doubt, without a doubt. It's good times in the market. Look, crypto markets are stressful, investing is stressful, investing in risk assets carries a lot of risk, obviously, and it is a stressful thing. Look, crypto is not going anywhere. This technology is here to stay, and if you understand that, if you believe that, and that you believe that this bear market will end like other bear markets have ended previously, then you're going to be fine. I'll be here with you throughout this bear market. I'll keep making videos. We'll make it through together. Anyway, your question for today. What do you think is going to be the bottom price of Bitcoin? How low are we gonna go? Curious to hear your opinion down below in the comment section. Thanks so much for watching today's video, and peace out till next time.